And it is time for the word on Wall Street. Top investors watching your money. Joining me right now, the Fitzgerald Group principal, Keith Fitzgerald, Strategic Wealth Partners investment strategist, Luke Lloyd, and Walser Wealth Management president, Rebecca Walser. Great to see everybody this morning. Thank you so much for being here. Keith, kicking things off with you with a market that is lower after a tech-led rally yesterday. Big tech growth really sending the NASDAQ soaring yesterday, 2%. What do you say, Keith? Are you buying this move in growth, in tech? I know you think that the recession risk is rising, but buying on the dip could be key. What do you say about tech?
Well, I tell you what, that's exactly what we've been doing, because people talk about growth versus value, but what they fail to understand is that for all the changes happening in the economy, I've not heard one person yet that's given up a cell phone, given up any of their high tech. It's going to power the world 5-10 years from now. These are the companies, when they dip, that you're going to kick yourself if you don't own a few years out.
Would you buy some of the names that are on the move now, or do you think we're missing it again? I mean, you're saying that, yeah, buying on the dip is key. You still have a decline year to date for the NASDAQ, right?
Well, again, I'm not particularly concerned about this because in the scheme of things, people worry about the short-term noise. What they're lacking is the long-term focus. Companies like Apple and Microsoft, yes, I'm buying continually, and we have been for several weeks. We're going to continue to do that as we move forward. We've got investments in all the financials and health and those kinds of things as well. But, you go with the winning horse. You don't switch in the middle of the race.
Good point. What about oil and inflation, Luke? Let's talk about that. One of the most important stories investors are focused on. Inflation for the month of February up 8%, hitting a fresh 40-year high. We're talking about consumer inflation here. When you look at producer inflation, that's all the way up to 10%. You say consumers haven't really stopped spending, even with this move up in prices.
Yeah, I mean, also the most interesting thing for me, Maria, is that consumer confidence is at levels we saw during the financial crisis back in 08 and 09. But what we haven't seen yet, like you referred to, is that they're still spending money. They haven't stopped spending money yet. That's the key word, is yet. I think consumer spending is near a tipping point right now. I mean, a lot of people upgraded their lifestyle after the lockdowns and restrictions. I mean, people were tired of being locked up and wanted to go crazy with their spending, which is understandable. I mean, once you upgrade your lifestyle, it's extremely hard to cut back, even with 8% inflation. The scary part is people aren't spending their savings anymore. It's now turning into spending their debt, which means credit card balances are on the rise, actually at a faster pace than ever. I mean, the last 3 months of 2021, we saw the biggest quarterly increase in credit card debt in 22 years. Nobody talks about that. And naturally, humans like to live excessively until they can't. Then the whole cycle repeats itself again. Look, eventually debt is going to catch up with people and people will be forced to cut back their lifestyle. But what happens then? The optimist in me tells me that the cooling economy might fix the supply chain and the lower demand is going to fix the inflation problems we're seeing right now. But the government has really screwed up this economy through all their spending and restrictions. And sadly, it's going to be a turbulent ride for the average American until we get back on track.
And look, we may very well see a recession this year. Rebecca, we've been talking about all these expectations from economists on whether we're going to see 2 straight quarters of negative growth this year or whether a recession happens in 2023. In the meantime, the prices of commodities are spiking. You want to take advantage of that, look to allocate capital toward commodities, right? As military operations in Ukraine continue and global food shortages come closer. Tell us about investing around the commodities space. Is it the commodity itself or the companies that produce these goods?
That's a great question, Maria. It's funny because who knew that wheat would be such a great thing? But when we look at Russia and Ukraine, talking about 12% of the calories that are produced for the world. So obviously that has a huge impact. And with Russia saying they're not going to trade wheat to their local partners, and then we have all these oil embargoes, we have so many things happening in the commodity space that is just, wasn't exactly what we were expecting, except for the gold. The gold we were expecting, Gold, it was interesting, Maria, because we were seeing resistance at 1930 and it popped when we had not 2 weeks weeks ago, it popped up to 2062. Obviously, came back down since. It's around 1930 again. But this is the space, Maria, that we really have to talk about. And one of the things in commodities that we're really looking at is the oil, and specifically, are we worried at all about the end of the petrodollar dominance that we're having between Saudi Arabia and China? And those talks are something we're watching very closely, because that is a concern that we have. We're seeing a tipping point, a convergence of global factors that are pushing us more and more towards commoditization and obviously digital currencies. And there's where we can really see a change in our total central banking system globally. And that's what we're watching right now, Maria.
Do you think we're going to see what? A string of rate hikes, 5, 6, 7? I mean, Stephanie Pomboy is a regular guest here, and she's basically saying the Fed's not going to be able to pull off all these rate hikes because the markets will react negatively and they will take a step back. What do you say?
Well, I mean, I agree that Powell is obviously looking at the markets every time he makes a decision. But, Maria, we cannot keep 10%. You said it yourself, PPI 10%. And while consumers have done very well to adjust their budgets, I agree that's at the tipping point now, and it cannot continue. And that's why Powell, you're seeing him stronger this week saying that this inflation has to be controlled. And so whether or not the market likes it, they're not going to like running off the balance sheet either. But both must be achieved to get this inflation under control. So I'm expecting absolutely a market retrenchment when these actions happen by the Fed this year. I'm expecting it this year, absolutely.
All right, we will leave it there. Rebecca, Luke, great to see you both. Thanks very much for being here. Keith, you're sticking around all morning, and we are grateful to you for that. Thanks very much, everybody. Have a good day. Much more ahead. Coming up, the crisis.